Imagine a bustling marketplace, filled with the sounds of people negotiating and the sight of colorful currency notes being exchanged. This is where currencies from all over the world are constantly being bought and sold, creating a dynamic and ever-changing environment. That's the Forex market in a nutshell. It's a place where fortunes can be made or lost in the blink of an eye. It's the largest and most liquid financial market globally, operating 24 hours a day, 5 days a week. This means that no matter where you are in the world, there's always an opportunity to trade. Traders, big and small, participate in this exciting world, hoping to profit from the fluctuations in exchange rates. From large financial institutions to individual traders working from home, the Forex market is accessible to a wide range of participants. Why is Forex so popular? What draws so many people to this market? Well, for starters, it's accessible to practically anyone with an internet connection and a bit of starting capital. You don't need to be a financial expert or have a large amount of money to get started. Unlike the stock market, you don't need a fortune to get started. Even with a small investment, you can begin trading and potentially grow your capital over time. Plus, the Forex market's around-the-clock nature allows you to trade whenever it suits you, whether you're an early bird or a night owl. This flexibility is one of the key attractions for many traders. But here's the catch. Forex trading requires knowledge, strategy, and a good dose of discipline. It's not just about luck. It's about making informed decisions based on market analysis and trends. It's not a get-rich-quick scheme, but with the right approach, it can be a rewarding endeavor. Success in Forex trading comes from continuous learning and adapting to the market conditions. So, are you ready to dive into the exciting world of Forex? Let's get started. With the right mindset and tools, you can navigate this thrilling market and potentially achieve your financial goals. Before we set sail on our Forex adventure, let's familiarize ourselves with some essential terms. These terms are the building blocks of your Forex knowledge and will be your compass as you navigate the complex world of currency trading. Think of it as learning the local language before visiting a foreign country. Just as you wouldn't travel to a new place without knowing a few key phrases, you shouldn't dive into Forex without understanding its unique terminology. In Forex, currencies are traded in pairs like EUR-USD, Euro-US dollar, or GBP-JPY, British pound Japanese yen. Each pair represents the value of one currency relative to another. The first currency in the pair is called the base currency, and the second is the quote currency. The base currency is the one you are buying or selling, while the quote currency is the one you are using to make the transaction. When you buy a currency pair, you're essentially buying the base currency and selling the quote currency. For example, if you buy the EUR-USD pair, you are buying euros and selling dollars. It's like exchanging your dollars for euros on a trip to Europe. This concept is fundamental to understanding how Forex trading works. Another key concept is pip, which stands for point in percentage. Pips are the units of measurement that express the change in value between two currencies. It's the smallest price move that a currency pair can make. Understanding pips is crucial because they help you measure price movements and potential profits or losses. For most pairs, a pip is equivalent to 0.0001. This tiny increment can make a big difference in your trading outcomes. So, if the EUR-USD moves from 1.1050 to 1.1051, that's a 1 pip movement. Keeping track of these movements helps you make informed trading decisions. Understanding these basic terms will help you navigate the Forex waters with confidence. With this foundational knowledge, you'll be better equipped to analyze the market and execute your trades effectively. Now that we've covered the basics, let's talk strategy. One of the most popular and effective approaches to Forex trading is technical analysis. It involves studying historical price charts to identify patterns and trends that can help predict future price movements. Think of it like being a detective looking for clues. By analyzing past price action, you can get a sense of where the market might be heading. Technical analysts use various tools such as trend lines, support and resistance levels, and technical indicators to make informed trading decisions. Don't worry, we'll delve into these concepts in more detail later. Imagine a surfer waiting for the perfect wave. They know that the wave will rise and fall, but they also recognize the points where it's likely to change direction. Support and resistance levels in Forex are similar. Support is a price level where a currency pair tends to find buying pressure and bounce back up. It's like a safety net for falling prices. Resistance, on the other hand, is a price level where selling pressure usually kicks in, preventing the price from rising further. Think of it as a ceiling. By identifying these key levels on a price chart, traders can anticipate potential turning points in the market and make more informed trading decisions. Section 5. The trend is your friend. Identifying and following market momentum. The trend is your friend is a common saying in the trading world, and for a good reason. It emphasizes the importance of aligning your trades with the prevailing market direction. Trading with the trend simply means identifying the direction in which the market is moving and aligning your trades accordingly. This approach can significantly reduce the risks associated with trading against the market. Think of it like sailing a boat. Just as a sailor uses the wind to navigate, a trader uses market trends to guide their trading decisions. If you try to sail against the wind, you'll face a lot of resistance and make little progress. Similarly, trading against the trend can lead to significant losses and frustration. But if you sail with the wind, you'll glide smoothly toward your destination. In trading, this means that aligning your trades with the market trend can lead to more consistent and profitable outcomes. Similarly, in Forex, trading with the trend increases your chances of success. It allows you to capitalize on the market's natural movements rather than fighting against them. There are various ways to identify market trends, but one simple method is to look for higher highs and higher lows in an uptrend, or lower lows and lower highs in a downtrend. Additionally, traders often use technical indicators such as moving averages, trend lines, and momentum oscillators to confirm the trend direction and strength. By combining these tools with a solid understanding of market fundamentals, traders can develop a robust strategy for identifying and following market momentum. This approach not only enhances trading performance, but also builds confidence in making informed trading decisions. Section 6. Don't get lost at sea. Setting stop-loss orders for safety. Even the most experienced sailors know the importance of having safety measures in place. In the unpredictable world of Forex, stop-loss orders are your life jackets. A stop-loss order is an instruction that automatically sells your position if the price moves against you by a certain amount. It helps limit your potential losses and protect your trading capital. Think of it as an insurance policy for your trades. Setting stop-loss orders is crucial for every trader, regardless of their experience level. It's always better to be safe than sorry, especially in the volatile world of Forex. Section 7. Patience, young trader, avoiding common Forex pitfalls. Now, let's talk about some common mistakes that beginner traders often make. One of the biggest pitfalls is overtrading, which is like trying to sail your boat in the middle of a storm. It's tempting to jump into every trade opportunity that comes your way, but this can quickly lead to losses, especially if you're not careful. Another common mistake is not having a well-defined trading plan. Just like a sailor needs a map and a compass, a Forex trader needs a clear strategy to guide their decisions. Without a plan, you're more likely to make impulsive trades based on emotions, which can be detrimental to your success. Section 8. Starting small, dreaming big. Practical tips for beginner traders. So, you're eager to start your Forex journey. Where do you begin? First and foremost, choose a reputable broker that offers a user-friendly platform, competitive spreads, and excellent customer support. Next, take the time to educate yourself. There are tons of free resources available online, including articles, videos, and even demo accounts that allow you to practice trading with virtual money. Remember, knowledge is power in the Forex world. Don't be afraid to start small and gradually increase your trading size as you gain experience and confidence. Section 9. The power of practice. Honing your skills for Forex success. Just like any other skill, mastering Forex trading takes time and practice. Don't get discouraged if you don't become a pro overnight. Even the most successful traders started as beginners. The key is to be patient, persistent, and always eager to learn. Take advantage of demo accounts to test different trading strategies and get a feel for the market without risking real money. Once you feel comfortable, you can start trading with a small live account and gradually increase your position size as you gain more experience. Section 10. Keep sailing. The importance of persistence in Forex trading. The Forex market is like the ocean, Fast, unpredictable, and sometimes stormy. There will be times when you ride the waves of success and times when you encounter rough seas. The key is to stay the course and never give up on your trading journey. Remember, even the most experienced captains have faced their share of storms. What sets them apart is their ability to weather the rough patches and emerge stronger on the other side. Section 11. Join the journey. Resources and support for your trading endeavors. Embarking on your Forex trading journey is an exciting endeavor, and you don't have to navigate the markets alone. There are numerous resources available to support you every step of the way. Connect with fellow traders, join online forums, and seek guidance from experienced mentors. Remember, the Forex community is vast and welcoming, so don't hesitate to reach out and learn from others. And hey, if you found this essay helpful, don't forget to like, share, and subscribe for more trading insights and tips. Happy trading!